Hey, what's up, you guys? Welcome to another episode of The Curious Cat. Again, going to be speaking about the economy as we are at the forefront of a major collapse, in my opinion. So, there's a lot going on that we need to talk about, a lot that people should be looking at, and it's a critical time to be paying attention for the well being of yourself and your family. And in order to do that, I think it's important that everyone understands what's going on. The main thing that I find not enough people are talking about right now is the debasement of our currencies, which is basically the foundation of this current system that we use to create prosperity and to trade and offer services amongst ourselves. So when that currency that's at the foundation of all these liberties that we are able to experience and have, when the money is at the foundation of that and offers us the ability to trade freely amongst ourselves, when that currency is rotting, it's very alarming because essentially we're all using this currency to exchange our time, our energy, our services for other goods and services. And in doing so, we trade our time for the money, and then we go to use the money to buy other services or goods. But in the meantime, the currency is losing value at record high rates. And we know this because we compare the currency's value to gold, which has a very stable inflationary level. So we know when we compare it to gold that the currencies are losing tremendous amounts of value. And that is why it's really critical that we start paying attention to this and watching it. Because if it breaks through these upcoming levels, if gold prices continue to go higher, I think we could be entering just uncharted territory where we see an exponential debasement of the currencies. And what that means for us as people using the money is that things are going to get even more expensive. So if you're already feeling kind of strapped economically, if you're already one of many who are living paycheck to paycheck and are already kind of struggling to make ends meet, it's probably going to get even tougher. And I hate to be a pessimist and to seem like I'm trying to bring bad news, but I also don't want to be ignoring what's actually happening. And it's very alarming, and I don't like to look at it and see what's coming because I find it's very scary in a way. But I don't want to act out of fear either. So all we can do is do our best to glean as much information as we can about the situation and then make our best choices accordingly. And with what I see coming is a major debasement of currencies. It's already happening here in Canada, where the dollar's almost lost half of its purchasing power in only the last 5 years alone. So that is massive. That is why things are just getting really expensive, and most people are strapped for cash. We have record low savings rates, record high debt, and everyone is, even with record low interest rates, people are still kind of struggling to make ends meet and make the minimum payments on their debt and whatnot, and their minimum the obligations that they have to maintain the quality of life that they're living. So when this debasement is happening, basically we need to do our best to shelter ourselves against that. And the main way we can do that is to purchase and hold physical precious metals, so being gold and silver. And gold is already at an all-time high, and it's well surpassed the previous all-time high here in Canada. We've had just huge debasement of the currency already. And so it's kind of a tricky time to be buying gold because you're buying at an all-time high. I made this mistake back in 2010. I bought in to the gold market at an all-time high. And basically, I got stuck holding that gold for the last 10 years, waiting to get up to the levels that I bought it at and to even to go higher than where I bought it. So you do need to be cautious about buying in at these high levels with gold. But that is why I think we're going to see a lot of people start flooding into the silver market, because silver is one of the only assets I can see that isn't in huge bubble territory already. And so I think when we see some of these bubbles start popping, like in the equity markets and potentially in the over leveraged real estate markets, I think we're going to see a lot of people flooding into the precious metal market. And with gold already so high, it's kind of pushed out of reach for many. So I think a lot of people will start flooding into the silver market. And I think silver is just one of the most undervalued assets on the planet at the moment. I think it's a tremendous investment. This isn't advice, but me personally, I just don't see much downside risk, especially with all this inflation and money printing that's happening. I just can't see the price of silver going much lower. And I've been telling people to buy silver for the last few years, and I was also buying over the last year or two when everyone else was selling, and then people were telling everyone that silver was dead as an investment, and everyone was just all in on the paper markets and paper assets and debt and real estate. And I'm a bit of a contrarian, so I just continued to buy silver, and now I'm glad I did so. I think silver is probably going to outperform most stuff moving forward, and it's accessible to just about anyone. Even though physical bullion is hard to get, there's wait times at the moment, so you do have to make your order and wait a few weeks. From what I understand, there are some bullion dealers that have physical, but they do charge huge premiums over spot price. So we are seeing that already, and you don't want to be the last ones to the market. You know, you don't want to be buying at the highs. So I still see huge room for silver. I still think we're at great levels for buying. I'm probably going to be buying some more. Um, and I'm in an interesting situation because I don't own land or real estate, and that leaves me feeling pretty vulnerable. I see arable land as your number one investment. We need a way to be able to grow food and produce food if we're going to enter a hyperinflationary situation where essentially the currencies just won't buy you what you need. So food prices are just going to go sky high. And if you don't have a way to grow your food or to hunt and gather it, then essentially you're stuck at the mercy of these uh, rising food costs, and basically it's going to eat away at your capital. And most people don't have a ton of capital tucked away, so that's kind of the risk that you're exposing yourself to when all you have is a bit of savings in these government currencies and you don't have arable land and whatnot. So I'm really not too sure of my next moves. I have been looking at property, but it's just everything seems so overvalued. And here in Canada, I've been in construction the last 20 years, and I've just seen the regulations get out of hand, and it's basically pushed the cost of building out of reach from your average person. And the only way people have been affording it is to overextend on debt and basically sign their lives away to the bankers. And I think the banking cartel, they don't mind this because they know that the second you miss a few of your payments, they're going to come in and they're going to take your house away, and they're going to take all of that sweat equity that you put into building your home, to renovating it, and all of the sweat equity that you probably put into earning the money to pay your mortgage. They're going to come in and just acquire that asset after years of you putting your own time and energy into paying down that mortgage and making the home beautiful and livable and improving it and whatnot. So I don't want to be buying at kind of like at the peak of a bubble, what I see as a bubble. But at the same time, I see that there's not a ton of land left. And I also see another cycle that's going to be taking place where a lot of the boomers are looking to retire, and they're looking to sell their real estate that they've been holding in these bigger cities that are now valued at astronomical amounts. They're looking to sell in these cities and these urban centers and move to smaller towns and more rural property, and they're looking to kind of change their lifestyle and change the pace at which they're living. And so I think we're going to see a mass exodus from the cities. And at the same point, if we do go into a really tough economic situation, I wouldn't want to be in a city because there's very little arable land in the city. It's mostly paved over, it's the concrete jungle. So there's not a ton of space to be growing food, and there's no hunting to be had unless you're looking at getting really desperate and eating rats or whatever you might find. I don't know how crazy it's going to get in the city. I'm sure that's not the case, but I'm just making the point that there isn't a ton of food sustainability in these cities. So I think we will see an exodus from the cities and into these more rural areas where there's more hunting, there's more fishing, there's more arable land and whatnot. That's personally why I moved back to the Okanagan. It's a very abundant area, and there's a ton of food production here and whatnot. So I don't even want to be sharing that with you. I don't want everyone moving here. Uh, but I've already let the cat out of the bag. But however, I just think that a lot of people are thinking the same. And so I don't want to be waiting to buy land at the same time, because if that migration happens from the city and everyone moves out here with capital that they acquired from selling their highly valued real estate, and they come and snatch up all the land here, well, I don't want to be left with my capital in dollars and have the prices inflate away even further out of reach than they already are. So I have been looking at just raw land and seeing if I can acquire that. However, the banks have really tightened up their lending policies. They're really picky about who they're lending to now, and the rates are really high, even though prime rates are down low near 2.5. If you have an unsecured line of credit or something where you're not basically putting your property on the line, or you don't have real estate to put on the line for the banks to come and take back, they're looking at an 8 to 9% interest rate, and that's if they'll even lend to you. So that's still, they need to look at your credit, they need to look at your income, how much you're earning, and they also want to look at all your assets and see what you have to put on the line. So they're really already tightening up their lending policies, and that goes to show that the liquidity for stuff like real estate is going to be drying up a little bit, in my opinion. And we also, mortgage deferrals have, I think we're in our 5th or 6th month here in Canada of mortgage deferrals, and they keep extending it. And if they stop those mortgage deferrals, a lot of people have already overextended on the debt, and they're already, we can see that 15 to 20% of the mortgages in Canada are in deferral, which shows us people already can't make their mortgage payments because of this crisis, and they're already strapped. So if we go into another lockdown here in the fall and we don't have the jobs to support all of this debt, even more people are going to be needing this mortgage deferral, this handout from the government, this uh, basically this financial aid. And if they take that away at some point, I think that a huge portion of the people holding real estate are going to be forced to sell. So there's a lot happening, and it's tough to make the right call. I don't want to go and use the bit of capital I have right now to buy raw land if in say 2, 3, 4 years I could basically walk in and assume somebody else's mortgage for next to nothing. I know in the 80s the policymakers jacked interest rates up as high as 23%. And basically, it forced a ton of people to sell their homes. And there was people that came in that actually had cash in that situation and basically bought homes for $1 because people were just walking away from their mortgages, and they needed to get rid of it. So they just sold the mortgage to somebody for say $1. They just said, take over my mortgage payments. I've been paying this for 20 or 30 years, but I can't afford 23% interest. I can't afford 10 or 20 grand as a monthly payment, and I need out, and I don't want to declare bankruptcy. So they would sell their house for $1. So that's where you want to have some capital available. That's where cash is king. And I think that when we say cash is king, we need to really understand that we're in a different environment, and cash in the sense of government fiat currencies maybe that cash isn't king, but I think currency is king. And I think currency, when you look at the word currency, it's current C. So it's the economic C, and it's whatever is current. And right now, in these inflationary environments, I think we're going to see a lot of people ditching these dollars because they're losing their purchasing power. So we're going to see people flooding into precious metals. And I think gold and silver might become the new currency in a sense. So I think I'm really happy with my holdings. I'm well diversified. I have cash position, I have precious metals, I have cryptocurrencies. The one main thing I'm missing is land. And I really want to get some arable land where I can grow food. So if things get really tough, gold and silver might not even save us. Definitely the dollars aren't going to save us. We know that much. We can see that they're devaluing, and already food costs are getting out of reach for many. So we know that's not a great holding. But one thing we know for sure that is great is if we have land to be able to grow our own food. So if you don't have the capital to acquire your own land, maybe you have social equity. Maybe you know people with land. Maybe you can work some kind of deal where you can get onto somebody's land. I'm actually looking at potentially making a deal with my parents. They have a bit of land. And so, you might have to suck it up a bit, some of us, and say, okay, maybe I don't get my own land. It's not like I want to move onto my parents' land at my current age. It's not something I'd be proud of, but at the same time, I don't want to go and overextend on debt and be wasting all my capital on an interest payment to the bankers. So I might just do what's best and what is going to provide me with the most resilience moving forward, where maybe I could work a deal where I lease a portion of their land or whatever. And then I have an area where I can actually grow food. I can raise some chickens. And I've just renovated a motor home. So maybe I can park it there as a tiny home and kind of live off the grid, and basically make some huge sacrifices. But in order for me to be able to hold on to some of my capital so that I have some purchasing power as we enter these potentially hyperinflationary situations. So I don't want to go and spend the capital I do have on overinflated real estate. Essentially, I don't want to come in and buy an $800,000 home with what capital I have and basically dump it all in and expose myself to huge risk. Real estate is very illiquid. So if the markets turn and everyone all of a sudden goes to sell, which I think we're personally going to see, I think we're going to see a lot of people starting to liquidate real estate. A lot of the boomers are the ones that are holding the real estate, and they're all looking to essentially start downsizing and raising cash to afford the cost of living as they enter retirement. So a lot of them had second and third homes. They were holding cabins on the lakes here. I know a lot of people on this lake that you see behind me, a lot of people have 2, 3, 4 homes on here that they like to come in the summer. They were renting it out as an Airbnb. But as they get older, they get tired of the maintenance. They get tired of dealing with the Airbnbs and hosting people and all the payments that are associated with holding these second and third homes. And they're looking to downsize, and they also need to raise capital to fund their retirement as we enter these inflationary environments. So I think a lot of these boomers are going to be selling their real estate and looking to sell to a generation of millennials that have no cash. So I've mentioned this in other videos. The boomers, by the time they reached age 39, had acquired 23% of the world's wealth. The millennials, the oldest millennial is now 39. We've only accumulated 2% of the world's wealth. So that essentially tells us that millennials have no cash. The only way they've been buying homes is by highly leveraging themselves with debt. And then the rest just have given up on home ownership. And what I see is a lot of people are just spending the money. They're just eating out a lot. They're going to festivals, to music concerts, and they're just living. It's more about lifestyle. So they've kind of given up on the dream of owning a home. And I don't blame them. I mean, it doesn't make sense for many people to become mortgage poor and basically make massive sacrifices just at a shot at owning a home. I personally haven't done that myself. I don't see the value in that, or I don't see it as a great play. The only way I want to buy real estate is if I know it's an asset, and the way to know if something is an asset is to figure out all the costs associated with owning that home, add them all up, and essentially see if you can earn more money by holding that asset. So that would mean if you added up all your expenses with the mortgage payment, the amount going to interest, your maintenance costs, your property tax, all the utilities you have to pay, everything that you can kind of think of that's associated with owning that home, you add that all up, and then you need to be able to rent that house out for more money than all of those costs added up. And if you can't rent it out for more money than that's costing you, that means it's a liability. And when we're potentially and highly likely that we're entering what could be the greatest depression in history, you don't want to be holding liabilities, because liabilities are essentially holes in your pocket, and they're eating away at your capital. And when we're in an inflationary situation where food costs are rising and the cost of energy is rising, the cost of shelter is rising, you don't want a hole in your pocket that's essentially eating away at your capital, because that's going to leave you in a very vulnerable situation. So that's why I haven't bought real estate. I think it's overvalued. I think we're going to have a lot of boomers going to sell to people that don't have cash. Very few people have cash right now, and the banks are tightening up their lending policies. And I think that's going to put a lot of downward pressure on the real estate market. So I think that it's overvalued. And I think a lot of that money, people are going to be looking to sell. If they see real estate starting to turn around and the values drop, they're going to be looking to sell as soon as possible instead of riding the value down, especially if they're looking at entering retirement. So we'll see people lowering prices to make sure that they can get that sale. And when they do sell, they're going to be looking for somewhere to park that cash that's not inflating away. So if you sell and you pocket $1 million, you don't want to just be putting that in US dollars or Canadian dollars into a bank account where you're earning less than 1%, or you're taking higher risk and you're going into stocks, but you're taking massive risk because the stocks are all overinflated, because the governments have been creating this currency out of thin air, and then they're buying up equities, they're buying stocks and bonds with the money now. So that's what's been pushing these stock prices really high. So you don't want to be buying stocks. In my opinion, this isn't investment advice, but a lot of people, I think, are going to be thinking twice about buying stocks at these potentially all-time high prices. And the other thing about buying stocks is any gains that are made in the currency. So if the currency is devaluing at, say, 5% a year, and your gains are 5% a year, you're taking huge risks just to break even, just to keep up with inflation. So I think a lot of people are going to be looking at alternatives, and I think that's why we'll see a lot of people enter the precious metal market. So essentially, I think that's going to put a lot of upward pressure on gold and silver. And very few people at the moment have the capital to be buying gold and silver. So they're going to miss the boat, I think. So I think it's better to be early than too late. So that's why I've personally been buying precious metals over the last couple of years, just while everyone else was buying real estate and leveraging debt to get into the real estate market. I kind of took the capital I had and I bought stuff like cryptocurrency and silver and gold. And I've been basically putting my capital there because I think that will rise while real estate deflates. And then my plan is to basically, when everyone's looking to rush into precious metals, and that I plan to sell some of my position and take that capital and get arable land. So that's kind of the play that I've been making. And I know what it feels like when you don't have capital and you're living paycheck to paycheck, and you're hearing all this information that I'm sharing. It makes you nervous, and I don't want you to be fearful. I've made huge mistakes by acting out of fear, and it's not a place to be making decisions from. So the best thing, I also like to kind of share information about what you can do if you don't have the capital, if you don't have huge money to be, buying real estate or buying precious metals or whatever. A lot of people are looking for answers. And I follow a lot of these other channels where they tell you a lot about what's going on, but they don't really offer solutions. So if you don't have much in the way of capital, the main solution I can see is doing your best to earn money. uh, get yourself a skill that you can use. There's a lot of trades programs that they don't take much to become qualified in. It's very little capital. A lot of these trades programs are actually free, and you just take the apprenticeship, and that way at least you have a trade that you can always be using to earn money, and then take that money and buy food. Another thing you can do is grow food. And if you don't have money for land, maybe you have social equity. Maybe you know people with land. Maybe you have a tight knit community and you guys can, find a way that you can work a deal to live on the land and help grow food. Or maybe you're really good at hunting or fishing, so you can find a way to start gathering some of your own food. So these are just some alternative ways that you can kind of shelter yourself and your family against rising food costs, and to just make sure you're going to be okay. And my plan is to essentially take this summer. I wasn't really, I did put in a big garden, but the place that I was in where I put the garden in ended up selling. So I lost a lot of my sweat equity there, but that's just the nature of the beast. And so I don't have a garden this year. And I do plan on getting my hunting license and doing a bit of fishing in the fall. But aside from that, I really do, moving forward, I want to get some arable land and be able to grow a garden and just get back into fishing. I grew up fishing, so I'll be bringing out my fly tying box again, starting to tie some flies and get some fish and smoke them or salt them and preserve them, can them maybe, and also looking at getting my hunting license, and hopefully I can get a deer or something this fall. So these are all ways that we can just have a little more food security in our own life. Because if food prices continue to rise, which I think they will, I don't want to be at the mercy of devaluing currency and basically not being able to afford food. So we have to do whatever's in our ability to shelter ourselves against that. And the way I see that is basically by getting a skill that you can leverage. So you don't want to be sitting around playing video games and watching Netflix and collecting these government handouts, because the handouts aren't going to buy you much in a year or two. We're going to experience so much inflation from all of these government handouts. Here in Canada, they're giving people $2,000 a month. Well, in the near future, I think that $2,000 a month won't even buy you good quality food for the month, let alone pay for your shelter. That's the kind of inflation we're going to see. So you need, in my opinion, the best thing you can be doing is acquiring skills that are transferable, skills that people are going to need in the future. And what a sure bet is learning to grow food. If you know how to grow food, if you know how to hunt and gather and essentially identify some of the natural medicine that grows around us and be able to forage some food, be able to fish, to hunt, and to grow a garden, that kind of stuff, we're all, I think a lot of people are going to be pressed to get the food that they need with rising food costs and with trade wars happening and less imports coming in, and essentially disruptions to the supply chain of food. So I think we'll see an upward pressure on food prices. And if you know how to grow your own food, and that, there's a lot of people that have land that don't necessarily know how to grow food, or they're elderly and they don't have the energy or the physical capacity to do the farming, but they have the land. Then you can leverage that skill of being able to grow food, and you could work a deal. We saw this in the past, in Germany and stuff during war times, where a lot of the families that didn't have the money, they essentially had to work a deal with landowners, and they would move onto the land, and in exchange for accommodation and some of the food, they would farm the land for the landholders. So I think we'll see a return of that kind of system where a lot of these people that didn't have capital and kind of, got caught with their pants down per se, or weren't able to acquire capital, or they didn't have they didn't get transferable skills. Basically, they're going to be at that mercy. So either they're going to be stuck at the mercy of the government and they'll have to just accept whatever the government's handing out, or they're going to have to learn to farm and they'll have to make deals with landowners. So that's kind of what I see coming, and I think a lot of people will be defaulting on the debt, and the banks and the elite will be acquiring a lot of the assets, and then a lot of us, that if we're not able to make the right plays in the next bit and we kind of lose our capital, we'll be at the mercy of them, and we'll basically have to do whatever they say. If they want us to grow food for them and we don't have another way to get food, we'll just have to do what they ask. And essentially, if we don't have transferable skills, we'll basically just be at the mercy of their handouts. So they might say, okay, we'll give you a government handout, but they're probably going to roll something out like social credit, like we're seeing in China. So then you have to do exactly what they say. You have to think the way they think. And if you say anything against the narrative, you're docked social credit points. If you break any of their laws, we're seeing tremendous amounts of regulation here in Canada where everything is just overly regulated, and essentially if you break any of those regulations, you're docked social credit. And then they'll basically say, like we're already seeing this in China, where if you jaywalk, they have facial recognition that sees you and you're ticketed and your account is already billed and the money's withdrawn from your account before you're even done crossing the road. And then if you get too many docs against you for too many infractions against their authoritarian control, you essentially are flagged and they'll cut you off from food or from water. They'll just, if you go to buy it on your credit card, they'll say, oh no, this person has too many points against their social score and you won't be able to buy food. So this is the kind of insane environment we're entering. We're already seeing it in China. Um, and the sad thing is we're seeing China kind of take over Canada and take over a lot of the political landscape here. And they're buying up all our assets, our gold, uh, our pension funds, whatnot, our gold mines now, a lot of our fresh water, that kind of stuff. So I think that could be the way it's going here in Canada. We're already seeing socialism roll out, and they want socialism because it increases government control. And then when they increase government control, they can roll out these really drastic measures in the future when everyone's just relying on the government so heavily. So I don't think it's a good thing to rely on the government. I think it's insane to basically trust them and think that they have your best interest at heart. They don't at all. They want total control. So that's why I believe that we should all try and create resilience in our own life. And to do that, that means growing capital, creating prosperity, getting arable land, and really connecting with your food, learning where it comes from, finding ways to get food, know your farmers if you're not farming yourself, find ways to hunt, to gather, that kind of stuff. I think those are all things we can do that's within our own means, and to basically get skills that you can leverage. So I've been an electrician for 20 years. I think we're always going to need power. Our world now really relies on power, and people always need to be expanding the grid and that. So that's a transferable skill that I can use and that I can always leverage to trade for food, to trade for capital, so that I can essentially take that capital, and the idea is to transfer it into arable land that I can essentially be able to farm on. And long term, if I am able to grow enough capital, I would like to get some income property that where I buy real estate, but the real estate is an asset where it actually produces more money than it costs me to carry that debt. So that's where debt can be used to your advantage. Debt isn't always bad, but you need to be able to distinguish between an asset and a liability, and to know where it makes sense to take debt and to leverage it. So that's my long-term play. If I do well enough, I will take the capital and look at buying some real estate that's an asset, and basically get that capital working for me where it's producing more capital without much input. So that's the idea, where you want to basically be acquiring capital producing assets. That's how the rich get richer. It's not by working hard and putting all their money into savings accounts, because that's what makes you poor. I've learned that the hard way. And yeah, I really want to wake people up to that so that you can do your own research. Don't take everything I'm saying for truth. I always am a big advocate of learning for yourself. All the information's out there if you do enough digging. So I've ranted long enough. That's a huge rant here, but I had a lot to say, and I just really am hoping to provide some value and some ideas for you guys as to ways to shelter against this highly inflationary environment. It's criminal what they're doing to our currency. It's basically enslaving and wiping out the middle class. We can see this if we look at the numbers, if we look at how the boomers had acquired 22% of the wealth by age 39, and now the millennials have only acquired 2%. That's all because of inflation. It's not because minimum wage isn't high enough or anything like that. The main reason is that the currency is rotting because they're inflating it away. They inflate it away by creating more of it and putting it into circulation through the form of debt, and essentially duping everyone into taking these high mortgages. So that's basically why the system is rotting. That's why people aren't able to create enough capital for themselves anymore to get ahead, because inflation has made the cost of living so high that people can't afford the cost of living and be putting some money away. It's just out of reach for many. So that is all caused by inflation. And that's why I talk so much about money and currency, because it's really critical that we use hard money and something as a currency that's actually going to hold value. So when there's nothing limiting the amount of money that they can create and put into circulation, we're fully exposed to the policies that they decide to make. If they decide to double the money supply in a single year, that would essentially cut our money's purchasing power in half. So you don't want to be exposed to a great unknown like that. And when you own precious metals, we know that they can't come double the money or double the supply of gold in a year. The max they can inflate it away is 2.5% a year if they ramped up all of mining production. And that would take years to do. So we would see that coming. So gold, we know the inflation rate of it. That's why you always want to compare the value of these currencies to gold. And that's why I know by looking at the chart that the value of Canadian dollars is essentially in free fall. It looks like we're entering hyperinflationary or a hyperinflation situation. So that's not a place you want to be, where all your money's in Canadian dollars or even in real estate, because when you go and sell, you're getting these government currencies for it. So you want to quickly, if you are looking at selling, look to sell now at the high maybe, and get into gold or silver or something like that right away. Uh, Bitcoin is also a potential hedge against this inflation. Um, it's a little more risky, but it does offer some solutions, and it has a lot of potential in my opinion. There's still a lot of unknowns there, so I do like to have the bulk of my capital in precious metals because I think it's more of a sure thing. But I still do have some exposure to Bitcoin because I think it has a lot of potential in the digital world that we live in. So I do like to diversify to some extent and have exposure to a few different things. That way, if one thing tanks, maybe the other one does well and whatnot. So with that being said, I've ranted long enough, and you guys please like the video, share it with some friends and family if you haven't already. And yeah, with that being said, I hope you guys all prosper, and let me know in the comments what you guys are thinking. I really think it's important to kind of share our thoughts amongst each other